YouTube. I think the YouTube's actually not just launched, it's getting there. And then Facebook. Rick, how are you? Thanks again for being here. Appreciate it. I trust that you could see the intro slide and you could hear me. I have my my anti-echo curtains drawn down right now. It's a little dark in here, but that's okay. Terrence, welcome back. And thank you for that kind Thanksgiving wishes from earlier session. Rick, how are you? Dennis? Bertram, Riney, James, Thomas, Windsor? Chris, thanks for being here. Appreciate it. I know everybody's up against Thanksgiving, the Thanksgiving break here that we're having here in the U.S. and a lot of folks are traveling or trying to pack or getting ready to travel or having visitors over, family over, which is awesome. So really appreciative of you guys making time today to spend another hour with me. If I missed a greeting, I apologize. We got a hello from Brazil. Awesome. Wanderly. A good evening from the Netherlands. I told you there'd be a good evening here today. So I'm on the East Coast. I'm a recent East Coaster. It's noon almost. We're going to start right on time here. We'll give another minute. Chris, it's my pleasure. I enjoy doing this. I enjoy interacting with you guys, really, is the key here. And that's what makes this community so, the whole NinjaTrader community is so special. Really appreciate that. Hello from Germany. Juan Gabriel is back. Good to see you again. Back-to-back webinars. Impressive. Team PAG ASA, shout out. Thank you for being here. League, good to see you again as usual. All right, we're going to get into it in a second here. I mean, this is part of our continuing, education process, that we publish every week on the platform training webpage, all sorts of great stuff. And highly interactive today. Feel free to come back and come at me. I am going to ask some questions though, and I want everyone to be honest because I'm going to try to be honest too. A lot of the things I'm going to talk about today with respect to psychology, I've fallen in these traps myself personally, and it's hard to admit. I've been at it a long time, and you have to struggle to stay ahead and to be aware. And that's for sure a real thing. Helen, this is recorded. It'll be published on the YouTube channel eventually, maybe immediately. I don't know how that whole process works. That's for the smart folks, other smart folks at Ninja that are helping me put this together. But yeah, you'll have an opportunity to look at it again, and maybe we'll do it again. I don't know. But so, today it's trading psychology, challenges to success. And I remember, a couple decades ago, and I've been in this business a long time. One of my mentors, Dan Gramza, kept referring to this idea that futures trading allows traders to express their opinion. I didn't really understand what he meant at first. Express your opinion. What do you mean? Well, you could express your opinion that prices are going to go up. You could express your opinion that prices are going to go down, or they're going to stay the same. And it doesn't matter what asset class. You could have this opinion, and the NinjaTrader software gives you the ability to express your opinion immediately, and not only on an intraday trading basis, but also on a position trade, long-term trade basis. That's one of the great things about being part of the community here with us at NinjaTrader. But Dan told me, it's your opinion might be different than my opinion, and which might be the same as another guy's opinion or another girl's opinion. And I started thinking about it, and the mechanics. There's the mechanics of trading, right? There's how to use the trading software, how to place an order. There's fundamental analysis that we all do. What's the state of the economy? What are the economic releases telling us? And there's technical analysis, right? We're setting up our charts. We have our indicators. I have my special way of doing it. I don't know if it's unique or not, but it's unique to me, I think. So all of those things are kind of muscle memory things that we could do. But we're human beings, right? And we're fallible. Right. And we have unique physiology and a unique experiences, which makes trading, at least in my opinion, trading successfully in conflict with the other things we do in life, right? This is a unique thing to try to conquer. So we're going to talk a little bit about that today. And any questions and answers, type them in. Casey, the answer to that is not yet. Chris, we could do some trade ideas too at the end. But all right, so let's kind of go forward here. Next thing I do want to remind everybody is trading futures options on futures does involve substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. Although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now that third part is a little tongue in cheek. I get that, but stress in life does matter, right? Stress in life matters. We make bad decisions when we're under stress. At least I do, right? So be in a good place, easy with your day trade, easy on the day trade margins, and risk capital only. That's my best advice on that. Pam, hello. Thank you for being here. And we're going to be using the NinjaTrader software to kind of tell the story a little bit about and come up with some examples and some insights on some of the stuff we're going to talk about today. I do have a PowerPoint. And this is really about fear and greed, right? We're going to conquer fear and greed. We want to conquer fear and greed. Those are the two things that, at least for me, I think that drives us a lot, right? Fear and greed, especially when we're talking about money, right? Talking about material things and the needs to, pay the rent kind of thing. And so right away, I think of this, remember The Godfather? Everybody's probably seen The Godfather, right? And The Godfather was, they tried to, the rival gang tried to assassinate him. And then the sons all got around and they're all angry and upset and they're ready to come up with the strategy of revenge. And, Sonny, the emotional one, was in charge, was, getting ready to go to the mattresses. But Michael said, so Michael comes up with the plan. Michael's the civilian in the group, right? He's not really one of the mafia guys. And he comes up with the idea that, hey, I will be the one to take revenge and to kind of cut things off, right? And then Sonny's like, yeah, you're acting emotional. You don't know what you're talking about. And Michael turns around and says, it's not personal, Sonny. It's strictly business. And I remember that. And when I think of that line, it applies to so many things in our lives. But, I want to take an approach here. This is not personal. This is strictly business. And we're going to look for ways to be as successful as we possible within a structured environment, right? We could express our opinion as structurally instead of emotionally. And that, I think, is the key to this whole thing. So I just threw that up there for fun. The other things that are really, really evident to me is the market's always correct and no one is bigger than it, right? Not even the Fed. I mean, the Fed certainly influences a lot, very powerfully, but no one's bigger than it. No institution, no one trader. And when I say the market is correct, the pricing tells the story. When buyers and sellers agree to a price, that's the answer, right? And I watch TV a lot. We all watch TV. We see I watch the financial shows, right? Because I have nothing better to do, arguably. And I hate it when somebody comes up and says, "Well, the market's in a correction right now." And my argument is no, it's not. The market's never incorrect. It's always correct. So that's that's an important thing to remember, because your opinion now is not going to influence the market. And again, supply and demand, the sum of buyers versus the sum of total sellers at any given time determines price, especially in the CME Group futures markets, right? These are electronically matched, transparent exchanges on a first in, first out basis. It doesn't matter if you're an individual or you're an institution. I mean, you're in line with everybody else, and that's what drives price. And the market simply doesn't care what you think. It just does not care what you think. If you think you're right and the market's going against you, It doesn't matter if you think you're right? The market just does not care. Steven says, you feel having a neutral bias on an intraday time frame could give you false signals. I typically short, but when I try to long and short moves in the same day, I find myself seeing false signals or bad signals or being whipped out. Yeah, I mean, that's a great comment from Facebook, Steve. Appreciate that. So on our Tuesday, Wednesday, Thursday live trade setup events that we do, we did one this morning. I always like to try to determine my bias for that day in terms of, is the market in a bull state? Is the market in a bear state? Or maybe we're in a neutral state, which means, looking for, long or short trades. It would be a legitimate trade idea, right? If we're in a bullish mode, I'm looking for places to buy. If we're in a bearish mode, I'm looking for places to sell. In neutral, well, we'll look in both places. That's my personal philosophy on it. I'm not a big fan of counter trend trades. But we're kind of jumping into the trade idea area here in the presentation, but that's okay. I really appreciate that comment. These kind of give and takes are great for this presentation. We have as much time as you guys want. There's no cutoff time at this point. There's not another event after this for me, so we can go a couple minutes over. Okay, let's move on. Number one thing, FOMO. I didn't know what FOMO meant for a long period of time because I'm considerably older than most of you guys. But fear of missing out, right? Fear of missing out I don't know, maybe it's the number one thing. Maybe it's the number one psychological phenomenon that we're going to face as traders. And we probably face this in real life and other aspects of our life as well. But, this idea of, hurry, I have to get in now. I don't want to miss the move, right? And as my time as a broker, I spent 20 years as a broker. As my time as a broker, it manifests itself in different ways. I'd have folks who were traders who were applying for opening a new account, and they wanted to rush the application process. It's faster than 4 hours. They wanted it to be done in 30 seconds so that they could place a trade because they didn't want to miss the trade that day. That's a red flag. There's always going to be another opportunity. That's just kind of one example. Another example is, excuse me. Another example on the micro set and on the more immediate level is this idea of limit orders versus market orders, right? And so let's just kind of pull. I've jumped the shark here on my presentation, but let's go ahead and just kind of. I'm sorry about that. Give you an example of what I mean by that, limit orders versus market orders. So here's an E-mini S&P 10-minute chart as an example, right? And let's say that I decided I want to go long in the market, right? And there's a couple of ways I could do. There's 3 ways I could do it really, but one way is to place the limit order, right? Which is, I'm deciding what price I would like to try to buy something at, and let's just go ahead and pick a price at 85.50, just for don't follow live home. This is just a sample. I got filled right away. Sorry, I missed it. My dome wasn't catching up. Let's do this again. Let me make sure I have the MES. That's why. We're going to change that. E-mini S&P, December 2021. Go back down here. Let's 86 even. Oops, I did it again. My bad. Because I'm doing it on the sell side. Man, it's been a long day. Thank goodness for Thanksgiving, everybody. We're going to do it. We're going to buy a contract over here on the buy side as I'm supposed to do it. All right. So I placed a limit order, right? I'm waiting for the market to come to me. My alternative to go long right away is just to go ahead and do a market order, right? Just to go ahead and do a market order. And by doing that, I'm going to freeze it. I have 1, 2, 3, 4, 5, 6, 7 ticks, 7 price increments, 7 quarters distance between where I would have got filled on a market order and where I'm going to get filled on a limit order. And now the negative is maybe I don't get filled down here. Maybe I don't get my long position. My experience is this whole idea of FOMO, where folks just want to jump in because they see that green candle right here. And it's like, hey, this thing's going, is usually a rush to judgment. And if my limit order is placed in some sort of scientific basis, which it would be when we do our analysis, then I have a better chance of getting a better fill and having a better probability of being successful on the trade. So that's kind of when I talk about FOMO, there's a couple different levels of it, right? I want to open my account. I want to get in immediately. I'm going to miss this move. Well, are you going to miss it? The reality is that there's always another day. There's always another market. There's always another trade setup, right? We have all these asset classes. You can see these on the right-hand side on my quote board or my market analyzer. You have a 23-hour marketplace that you could participate in. And then you have the ability to develop your own trade strategy, the thing that works best for you, and implement that strategy according to a set of rules. And there's always another chance. And so what we talk about in the Tuesday, Wednesday, Thursday events is there's three things that could happen, right, in the trade. Number one is you get a fill on your limit order to enter your trade, whether it's short or long, and it's a profitable trade. It's a successful trade. Number two is you get in your trade and it's a losing trade. You lost money. And number three is you don't get filled, right? So that's kind of the second best thing that could happen is you don't get filled, right? And that's okay because you're being patient, you're expressing your opinion through your strategy, and nothing happened. You're going to get another opportunity. So I always say, that's 2 out of 3 things in that scenario is going to go well for you. The thing that goes bad if you just rush a trade and it's a losing trade, and you're not going to feel good about yourself. Belief perseverance. This is the tendency to hold on to beliefs even when evidence proves those beliefs to be wrong. Let's take a look. I have an example of this, and it's a recent example. Let me just I'm going to expand my window here a little bit, and we're going to talk about. I'm going to pull up. This is 2 days ago. This is the Powell nomination. Remember FOMC, the FOMC chairman, right? Was it going to be Powell? Was it going to be Brainerd? Was it going to be somebody else? And this whole thing was was anticipated, right? And so it happened at 9 o'clock, right? See right here. President Biden went out and said, "Hey, we're going to go ahead and I'm going to nominate Powell again. I'm going to nominate Brainerd again, or I'm going to actually give her a promotion. She's going to be vice chair." So the core of the team is going to stick together. And the conventional wisdom at the time was this would be a good thing. This would be a good thing for the market, right? The belief perseverance here is this is going to be a positive thing for the market, and sure enough, it was, right? Initially anyway, it was. And so the idea I'm going to express my opinion. I'm going to go long in the E-mini S&P or in the stock index futures or SPYs or whatever you're trading, because this happened. Well, then we had a pullback, right? But that's okay. I'm still a believer, so I'm still going to go long until here. Until here, belief perseverance, market approved until here. And then what happened? We started breaking and we literally started making new lows. Do you still believe right here? If you still believe right here where this arrow is, you see my still believe text over here on the right-hand side, you were a buyer here, right? If you believe that, forget about any other piece of information in the marketplace right now. If you're believing that, hey, this nomination is good, we're going to end up higher on the day, I'm buying right here. You know what happened next, right? It was not pretty whatsoever. So we kept going. And anyway, so that's just one example of many of this idea that we tend to hold on to our beliefs even when there's all this other information to suggest that our belief is wrong. Our opinion is wrong. William, we could talk about some of that more structural trading related stuff toward the end. Let me whip through the hopefully not too boring PowerPoint and keep moving forward on this one. Thank you. So the punchline on belief perseverance is, you should have more faith in your indicators and the candle structure and your bias, your directional bias as you're approaching a trade, and a little bit less belief perseverance in things that you just think should affect things any given way. Just kind of pull that other question box up so I can see it a little bit better. Appreciate that. Oh, we're going to get to that, Gino. Gino, great question. Lee says, FOMO gets me every time, and sometimes I actually know I'm doing it. And we all do. It's not just you, Lee. It's me. It's everybody. The more we're aware of it, though, the calmer we are and the more patient we are. And it all goes back to the whole thing of risk capital, right? Right. My personal definition, mine afford to lose doesn't change my lifestyle. So in any event, Emerson, thank you for being here. Appreciate that. Emerson from Mexico. So belief perseverance, it's a real phenomenon, right? It's a real human phenomenon. Confirmation bias is the next one. It's a tendency to search for, interpret, favor, and recall information in a way that confirms or supports one's prior belief, right? I think that, you have a certain bias, you think something's going to happen, and you're looking for information to validate your belief, right? Let's take a look at, I got a daily chart here. This is a weekly chart, weekly S&P chart, and I have a horizontal line drawn here in November of 2020. And you remember what happened in November 2020, right? So this was the presidential election, right? And right up to the presidential election, and I circled the 3 weeks before, we saw some red candles there. The conventional, maybe not the conventional wisdom, but we saw a lot of chatter on social media, on the news channels and other places where it almost seemed like it was the conventional wisdom was, if the Democrats get in power and they take the executive branch, then it's going to wreak havoc on the stock market. It's going to just destroy the stock market. The Republicans are pro-market, the Democrats aren't. And I'm not advocating either way. I'm not advocating I'm Republican or Democrat or anything like that. But the idea was this was going to be bad for the market, right? This was the confirmation bias. And look what happened. I mean, this green bar was November, where my crosshairs are. Look where we're at now. 46.85. So that confirmation bias turned out to be false, right? So if you decided just on the basis of that information, you were going to start, throwing things overboard and selling stocks in your portfolio and shorting the E-mini S&P, then you probably would have not had a lot of success. I mean, this is a bull market. It's strong. We went from literally at the end of October, we closed at, let's see, I'm going to estimate it with my crosshairs here, 32.23, and now we're at 46.84. Very, very powerful. So things like that could trip us up. Things like that could trip us up. And we see other types of information. As an example, we'll see a headline, vaccines are waning against infections, right? The vaccines aren't working, and this is going to be terrible. We're going to go into recession. I'm selling all my equities, and that hasn't happened. It hasn't happened. So those kind of things, be careful of. The opposite is true as well. It's, hey, 83% of large cap stocks beat earnings. Let's just go ahead and start buying, right? That's, if you would have done that, you would have been okay. But again, that's not part of that technical analysis, part of that fundamental analysis, decision-making structure that we want to create. Preconceived expectations, right? Chris just pointed that out, which is an excellent observation. So, Juan, we're going to talk about that. I personally like to believe in the structure, the candle structure of the market, because it kind of tells us where buyers and sellers, in my opinion, are coming and going. And we'll touch on that as we go a little bit further. What do we got next? Heuristic availability was my next one. And these are making decisions based upon how easy it is to bring something to mind. How easy it is to bring something to mind. And easy things to remember, but sometimes you forget their value. How important is that easy thing to remember? And one of the things that strikes me as a good example is, I don't know if you remember a couple of weeks ago, but all over social media and all over the TV, maybe it was 4 weeks ago, I'm not sure. We had this. We saw these videos of the port of LA, with all of these ships waiting. The supply chain's broken, right? All the ships haven't gotten to port yet. All of the containers are still sitting there on the shoreline. They haven't been emptied. And supply chain for sure is a real problem. Right? It's a real thing right now. But if you just saw that picture and you listen to that, it's easy to remember because pictures speak volume. You see that picture, it's in your head. You're like, oh my God, this is terrible. It's the end of the world. The equity market and everything else is going to fall apart. Well, that didn't happen to the drama that I'm kind of putting forth here. But it's a good example of heuristic availability. We just remember that, right? Versus our technical analysis, right? Versus low yields in treasuries, great earnings reports, all this other information that we should factor in alongside the photos of the Port of LA, being or Long Island, being backlogged. You just that one thing is easy to remember, and so you tend to want to try to make decisions around that one thing. This morning we had, as an example, let's just take a look at a daily chart. This actually probably works in our favor here a little bit on this whole idea, but the day's not over. Here's again the E-mini S&P. Let me kind of just get this pulled up a little bit better. And this morning we had initial claims was 199,000, a decrease of 71,000 from the previous week's revised level, the lowest level for initial claims since 1969, right? And what I'm thinking the whole time is, well, I mean, that is a pretty impressive statistic, lowest since 1969, on initial claims. This is going to rally the market like crazy, right? Well, it didn't. The S&P is still down 6, NASDAQ is still down 38, Russell is still down 9, and the Dow Jones is still down 124, right? So by picking one of the things out that's the easiest to remember, again, this initial claims thing was all over Twitter. I'm a Twitter fan. I like to follow the tweets. It gives you some good real-time information. But the suggestion there was this is an incredibly good piece of information for the stock index market, and it didn't really materialize that way. Yeah, we had a lot of volatility today, and we did have some uplift when the announcement came out, but we're still down on the day. So that was another really good example I thought of a heuristic availability. Another one would be, hey, last time the market closed on its highs on a Friday, it sold off on a Monday. Therefore, if it closes on the high on a Friday, I'm going to sell on a Monday. That piece of information isn't enough to make that decision. Okay. PM says November 2020 UGG. All right. Repetition, compulsion, psychological phenomenon. And by the way, these definitions I just pulled off, these are commonly recognized definitions you could find on Google or other places. This is not me making these up. But it does apply to, in my opinion, traders. So a psychological phenomenon in which a person repeats an events or circumstances over and over again. Fool me once, shame on you. Fool me twice, shame on me. Right. The chronic trend trader. The chronic counter trend trader is a good example of this, right? And let's just go back to our weekly chart. We could make this a daily chart, so it's just not so well, we'll leave it as a weekly chart, but the counter trend trader is going to say, okay, here's the election. We rallied up to this point. Market can't go any higher. I'm going to start selling it. Well, oh no, okay, all right. Well, no, it can't go any lower now. We're on May 7th. I'm going to sell some. Well, it can't go any lower now. And this is the repeat of this idea, and I'm sure there's a couple of biases thrown in on my example here, but it's repetitive compulsion. You're making the same mistake over and over and over again. What we talk about Tuesday, Wednesday, and Thursday at the live trading events, and what I do literally, even when I'm trading in sim mode, which is I have a live sim account on the screen right now with real-time data with the NinjaTrader software, is I take notes. Whether we have a successful trade idea, like today we had a successful trade idea. And I took notes and wrote down why it was successful. And, the reason was we actually had a patient, nice entry. We scaled in and, we trailed our stop accordingly as we peeled off successful units. And the day before I had a terrible trade, right? It was bad. It was a horrible trade. It was a bad idea. And it was because basically I was impatient. I didn't let enough information, enough data come to me. I got in too soon. And so I know that, and I wrote it down and I'm going to remember it. And when you write things down, remember, you write things down, your brain processes information differently than when you listen to it or you just see it, right? When you write things down, your brain processes things in a way that helps with retention and helps with understanding. That's a fact. I didn't make that up. Okay. Loss aversion. I don't even know what to make of this one. I mean, a tendency where the trader is so fearful of losses that they focus on trying to avoid as losses more so than on making gains. And the classic example of this, I think, is when you look at your realized P&L and your unrealized P&L. And I'm just going to go ahead again. I'm going to randomly just place a trade here. And you're going to be able to see your P&L move around in real time, right? That's what that unrealized, what that unrealized is. And so I just, bought a contract at the market just for fun, just to kind of do the example. And now I'm going to go ahead and place my stop order in here. And let's see, excuse me. Let's make sure I have my chart trader on here. Let's take our time. Aha, that's why. Okay, so I'm going to put a stop loss in here. So since I'm long one, it'll be a sell stop. So I'm just going to kind of go down to my trade ladder. I'm going to use my roller on my mouse. I'm going to go ahead and just put a unit in, and I'm going to send it. Okay, so now I have my stop loss in. So the idea of a stop loss is, hey, I'm expressing my opinion that I want the market's going to go up and appreciate in price. And I would like to go ahead and try to sell it at a higher price. But there's a point in time when I'm going to be wrong, right? There's a point in time, and it's going to be based on my technical analysis and other pieces of information. But there's a point, and I want to have a stop in there. I want to put a stop loss in there because when I'm wrong, I'm wrong. I want to admit defeat, and I'm going to get out. I'm going to take a loss. And I'm going to move on and look for the next trade setup. So what happens a lot of times with loss aversion is your unrealized P&L, unfortunately, in this example, we're positive, but if we were negative, your unrealized P&L as it gets negative, you decide, well, I don't want to have it realized. I don't want to end this trade because I think I'm right. So what I'm going to do is I'm just going to move my stop down. I'm going to move my stop down. I know it's against my plan. I know it's not what I envisioned, but I'm going to do it anyway. And as a result, now I'm adding to the risk on the trade. The risk reward ratio is different than it originally started. I don't have this stop is in an area that I never originally contemplated putting it, but I didn't want that unrealized loss. I don't want that unrealized negative loss to turn into a realized negative loss. I want to be positive, right? So I'm just going to hold out because I know eventually I'm going to be right. That's kind of I see that all the time. That's something I see all the time. Loss aversion. The other part of that, I guess there's another part of that too, is on the positive side. And let me just kind of show you what I mean. So here we have, I have, let's say my plan, let's put this back to where it was. Let's put this back to where it was. And let's say my plan was my profit target is up here at 86, right? That's my profit target. And I'm waiting and I'm waiting and I'm waiting. Now I'm getting impatient. And now, you know what? I'm going to bring it down. I can't wait any longer. So now I change my plan again on the upside instead of the downside, limiting my profit potential. Just because I'm impatient, it's loss aversion. I want this to be positive. I can't take it anymore. So that's another thing that really, it's a tough thing to overcome. It really is. But moving stops and moving targets, that's in a way that's contrary to your game plan going into the trade, is usually going to result in badness. And you guys all know what my definition of badness is. Okay. Yeah, Robert, Robert asked a great question. Do you have an open trade room where someone could watch you trade? And if so, where do I find it? And I'll ask Isabella to go ahead and cut and paste the platform training webpage on there. That's updated on a weekly basis. You'll see all the links for all the events. And not only the ones I do, but the ones that the other really awesome folks do at NinjaTrader as well. Yeah, Alex says, hurry up and sell it just in case it goes down from here. Right. That's kind of a gut, without strategy kind of thing. All right. So all these are like cognitive biases kind of concepts. It's a systematic pattern of deviation from norm, rationality, and judgment. And, at the end of the day, what is reasonable? I've always found it useful to think in terms of what is reasonable. Is this a reasonable place to get in or get out? Is it reasonable that the market, it's going to behave in this fashion or not? And that's always been helpful to me personally. Looking at this chart right now, I'm going to say, is it reasonable that we can make new highs on the day? And I'm gonna say yes, but it's also reasonable that the opposite can happen as well. Is it reasonable we could make new lows today? Yes, but less reasonable. So that's kind of how I think about the market when I'm looking at structure and we see a lot of buying come in, and we get a retracement at some point today for sure. And it's not for sure. I shouldn't say for sure, but I think it's likely. And again, that's just my opinion. So what is reasonable? All right, let's talk about chemical hormone traps, right? And I have a quote up here from John Mayer. I know the song he wrote has nothing to do with what we're talking about today, but it's a chemical weapon for the war that's raging on inside our head, right? And there's certain realities here that are true. The human physiology is unique. It maybe not unique in the animal world, but it has components that make us. We have dopamine, right? We have dopamine, chemicals in your head that are reacting to stimulus, situations. And when we're in a trade, it's exciting or it's fearful, right? Fear and greed. You have this, and you can't control the release of this chemical. This isn't something you could just mentally say, stop, don't do it. Serotonin, oxytocin, endorphins, etc. And the list goes on and on, right? And these are, I don't know if these are left over from our initial lizard brains, or if this was, part of our survival pre-industrial human being, but it's a fact, right? So when we're excited and we're involved, we have all of these things that are reacting, and they're challenging this notion of be patient, stick to your game plan, as opposed to in real life when this stuff kicks in and you might need to react, right? You don't always need to react. Adrenaline is another one, fight or flight. Sometimes the body will release the hormone when it's under stress, but not facing real danger, right? And so when you're in a trade and you want to move your stop to give you an extra $100 wiggle room, are you in real danger? I mean, I hope not. Stick to your game plan. This can create feelings of dizziness, lightheadedness, vision changes. I mean, this could really, mess you up. releases glucose, fight or flight response. When no danger is present, that extra energy has no use, and it could leave the person feeling restless and irritable. I agree with this 100%. I get excited even when I'm in a sim trade, let alone a live trade. So, any questions on that? All right, how are we going to fix this other than be patient? Well, we could be healthy, right? We could be healthy. And I'm old enough to be able to preach a little bit here, so I'm going to. I apologize in advance, but I've been doing this decades, and I was on the floor in the early '80s, maybe even before that. I can't remember. I argue with my mom all the time, and when I first started on the floor of the Board of Trade, but it was back then. And Mark Douglas was there, and the great books by Mark Douglas, by the way. When you're thinking about trading psychology, Mark Douglas was a good author. He was on the floor back then too. And but some of the things we could be healthy, right? What I do, I walk the dog. This is what I do. That's but it's something, right? It gets me going, gets me outside. Eat well, protein, less saturated fat, more refined sugar. It'll help with that glucose level. It'll help you feel less full, less sleepy. All of these things do matter, especially when you're sitting in front of a screen. Remember, sitting in front of the screen is probably the most boring thing you could do, right? It's probably the most boring thing you could do. And that's the key to be bored. That's that you want to try to be bored. You want to try to just look at this. Remember, Michael, it's only business. Drink less. I'm challenged here. I'm trying. I'm doing my best. I'm doing really good on that. And that's another thing. I mean, it dehydrates you. You get a headache. It's something that you could control. These are things you can control. Listen to music. Study after study say you're going to be put in a better mood. It's going to be better for your brain. Get some sun, vitamin D, get outside, get some fresh air, sleep well. Those are things we could do, right? Those are things that we could do. Let's point out some other areas that affect our psychological approach to trading and how we process information. Zach says, less saturated fat. Recommendation is outdated. Oh, okay. Well, I'm just telling you what my diet's like, and I feel really good. I've kind of kicked this. I started this last year in March, I think, of last year after my annual doctor's appointment, which I blew off the couple of years before that. And literally, I failed every single test. Doctor called me next day because you failed every test. so I implemented those measures: exercise, eat better, drink less, get sleep, and it's worked wonders for me. I lost 40 pounds. I feel great. I have a lot of energy. So that's worked for me. It might work differently for you, but whatever you think is best on that front. Those are just my tips. Pam, hang tight. I'll get back to that question in a second. Sim trading is not the same as live trading. I'm in a sim account right now. And for the hormones, for the chemical processes that are going off in your brain, it's different, right? And I always tell people the best pathway, if you're brand new to trading or brand new to futures trading, is sim trade. Get the NinjaTrader trading platform, sim trade, and learn the mechanics of how to use the software, how to enter trades, how to configure your desktop, your Windows, your internet connection. Get all that stuff right, and then start developing strategies. And spend some time at it, right? When I was a broker back in the day, I'd call you up and I'd say, "Hey, how's it going on your sim account? You ready to go live?" And a lot of traders are like, "Nah, I didn't have time to really use it, but I'm gonna go ahead and go live anyway." Well, use it, and spend focus on not only when you're going to trade, but how you're going to trade. And then the next step is, maybe if you're brand new and you have a little bit less risk capital, is a you trade micro futures with live money, right? They're 1/10 the size of the regular market. They have this M in front of the symbols: MES, micro E mini S&P, micro NASDAQ, micro Dow, Russell 2000. We have micro currencies. We have micro crude oil. We have micro gold. So you're practicing with real money, but your risk exposure is less relative to trading the larger size contracts, right? And a lot of the micros have a lot of good volume in them. So thank you, Rini, for that. Rini just cut and paste some of the symbols in there for me. I appreciate that. Griffith is back from lunch. Hopefully you didn't have too much saturated fat in your diet. We just went over our dietary habits here in the event. But in any event, so that's one thing to keep in mind. And this isn't really a conclusion. This is just a bullet point I threw in there. But let's, transition to micros if necessary. Be open-minded too. This is the other thing that always struck me as odd is, going into an economic release as an example in a regular market environment, when folks are trading ahead of the economic releases, which are typically, government issued reports. Sometimes they're not government. Usually they're issued around 8:30 pre-market East Coast time, and a number will come out and it will either be a huge hit or a huge miss, right? And you expect the market to react in a manner which makes sense, but a lot of times it doesn't. Right? A lot of times it doesn't. So be open-minded. So when you come in with your strategy, be open-minded. Things could go wrong. It's not a slam dunk that non-farm payroll number is going to go your way, even though it beat the estimate, right? So be open-minded, and anything could happen on any given Sunday. Best practices: have a stop loss in, and be willing to stick to it. The other thing that's in your control a little bit is to be able to know what's coming up, right? Be able to know when the next Fed meeting is. Be able to know, who's going to have a press conference this afternoon. Is the president going to have a press conference? Is the ECB having a press conference? Things that could affect the market. Know ahead of time. Know what the economic releases are going to be, right? Know these things. We could know these things. Very few things we can control. Well, we can't control price for sure. We can't control market behavior for sure. No one's bigger than the market, but we could do certain prep things to get us going. And I think I closed my cheat sheet here for my what I do every morning is I do a cheat sheet like this. So I'll list, I have some notes, durable goods was coming out. And then when the release, I cut and paste the data, GDP, jobless claims, we had a whole big data dump today, international trade in goods, so on and so forth. And I literally make this Word document, Fed parade, what Fed folks are going to be speaking today. I want to keep track of that. I have my Fed Watch tool here that I can look at what the predictions on rate hikes are, and so on and so forth. But a little bit lower. I keep an eye on the money supply. M1 I think is important, and then even at the very end I'll have stuff that's going to happen on the Hill. And earnings on here as well. So this is like stuff that it's a little bit of homework. It doesn't take that much time. You can get a lot of this information from Econo Day or from the CME Group Economic Calendar. If you just type in CME Group Economic Calendar in Google, you'll find that information. I do, Harold, great question. It helps to not be watching news. No, I disagree with that. So Harold, what I do, I think you need to have, I literally through my Hulu subscription, I stream Bloomberg Live. That's mine. And there's other ones. You can stream CNBC, whatever you want through this Bloomberg app, which I think is awesome. And so I have that running over my shoulder, and I'm kind of listening. And that's mostly pre-market for me, right? I want to hear what everyone's thinking, what the biases are, what happened in Europe yesterday. And then it also gives me information on what's coming up. It helps me prepare, hear the things that are coming down the pike. So anyway, but that's a great comment. Griffin, hang on a sec. Pam, I'm losing track of questions. Pam says, how important do you think it is to have a written plan that you look at while you're trading? Is there a written plan that you use for the 10-minute Tuesday, Thursday live trading that you do? Yeah, Pam, for sure. I mean, absolutely. The written plan is volume profile, oscillator, moving average cross, Fibonacci, know all the things that happened already this morning with respect to the releases, what's coming in front of us. And that's my plan. right? And I do it the same time every day, same strategy, the same set of indicators every day. And then when the strategy fails, I want to analyze why I do it. So for sure it's written down, and for sure it's something that you could tweak as you go, and you should tweak, right? The paradigm of the market changes all the time. It's never the same. We just been the one market we looked at right here, the ES, is it's been in bull mode forever, and I think the equity market's designed to be in bull mode forever, just the way that the corporate structure here is in the U.S. But if you're looking at gold, here's a gold chart, and gold has been in bear mode for the last 3 or 4 days. And you can see it here from the daily chart, more than 3 or 4 days. And so that gives you an opportunity to express your opinion the other way, right? I want to go short or whatever. And then you could use the same strategy with the volume profile, Fibonacci, oscillator, moving average cross if it's successful for you. Maybe your setup is different than mine. Maybe you're using VWAP, volume weighted average price, which is awesome here on NinjaTrader. Maybe you're using some other rule-based system, which is fine as well. But the key is, once you write it down, then you can start taking notes on what went right or what went wrong. Samuel, I don't know if you could listen to it in Spanish or not. I apologize for that. I do talk very fast. I know it's a criticism that I get all the time. I'm trying to do better, and I will continue to try to do better. I apologize for that, Samuel. Griffin has stepped in with some comments on trading plan. Many people have both a written trade plan and keep a trading diary. I never have because I'm lazy. Griffith has a great sense of humor. He comes to the events. He's the co-presenter of the events in the morning on Tuesday, Wednesday, and Thursday. Yeah, so once it talks about back testing, I think has a role for sure when you're first starting out, but eventually it's this muscle memory, this grind, this patience, this deliberate boredom every day, chip away, and don't be too greedy. Don't be too greedy. Pivot points, William. Yep, that's a great comment. That's another tool that you could use to do your technical analysis. I don't have them up there, but all right. Let's see, where are we at on my PowerPoint? I lost track. I'm down here. Envision potentially unplanned news. So if you remember, early October, we were going through this whole scare about the debt limit and how the U.S. is going to run out of money. Everyone's credit rating is going to go to zero. Everyone's going to get fired. There'll be no, and then people who are, retired folks aren't going to get their, they're not going to get their money. And it was this whole big drama that went on. And then, so you knew that this was a thing, right? You knew that this was a phenomenon everyone was talking about, and you had to be careful of. And there was this game that they were playing between the, McConnell and the other folks. And so Joe Biden does a surprise press conference, August 6th, right? Didn't know it was coming, couldn't prepare for it, but it happened, and it did move the market for a little while anyway during that time frame. And when I say envision potential unplanned news, but the other really important part of that is make sure you maintain best trade practices, right? You're entered into a position, you're going to have your stop, you're going to have your profit target, you're going to be all set up and ready to go. All right, I think that okay, this is a good one. I have it in capital letters, and it's literally bold in capital letters. I know I don't like it when people text me bold letters. It makes me feel like I'm in trouble. But don't over capitalize your account. And again, remember, we talked about risk capital because it's stress. Stress is going to make you make bad decisions. Easy. Go with the micros if you have to go with the micros. And that was one of the beauties of when the CME decided, hey, we're going to go micros all over the place, because what they're saying is they're going to make futures trading accessible to just about anybody. Just about anybody. You could fund with hundreds of dollars instead of thousands of dollars. Remember that. I'm a big fan of the micros. And I think that's it for my formal part of the presentation today. Let's take some questions. I'm going to leave this up here for a second. I want to remind everybody before we finish that this is a real Risk is a real thing, so be careful. Let me just kind of scroll back here. Harold says, I used to do 2 transactions in micro S&P every morning, but when I lose, I keep going, revenge trading. I thought I had a revenge trading slide in here, and I guess I don't. My bad. Yeah, let's talk about revenge trading. I might have glossed over it, but it's a thing. It's a real phenomenon. And what is it? So let me give you an example. So, let's say we have a really good trade in the morning. And it inspires confidence, right? This is easy. I could quit my day job. Look, I could do this all day long, right? And so you had a healthy profit in the morning, and then you go ahead and you make another trade, maybe outside your usual time frame or outside your usual parameters. You get overly aggressive, and then you have a losing trade. And then you're like, all right, shake it off. And then you have another losing trade. And before you know it, you're negative. Or maybe even you started off negative, but you're going to get it back. You're going to get it back. You're going to keep trading until you get it back. And usually when folks do that, hey, I want to make $500 a day. I have a target of $500 a day. I have a target of $1,000 a day. I want to double my account by the end of the month. When you start thinking like that, then you're chasing money instead of chasing trades. Stick with the structure. Stick with the structure of the chart, and stick with, is there a trade opportunity here? Yes or no. And then if there is, and you think it's a high probability of success, then you should try it. But don't get in a situation where you're trying to make up dollars. You're going to have losing days for sure. That's a real thing. And you're gonna have to learn. You're gonna have to learn to take it. Something, we a lot of times what we say in our Tuesday, Wednesday, Thursday events. Sometimes you're the windshield. Sometimes you're the bug, right? You just want to be the windshield more than when you're the bug. That's it. But definitely try to come to the Tuesday, Wednesday, Thursday events. It would be helpful. Hopefully it'd be helpful. They're free. Tell your friends, tell your family, tell your neighbors, tell your countrymen, fellow countrymen, tell your enemies. We'll make them your friends. It will be our goal. If I miss any questions, please type them in again. I know that a lot of stuff cruised through here. I might have missed something. Not in any hurry to end. We are at the end of the PowerPoint anyway. William says, embrace the losers when you adhere to your stops. It's part of the game. And he's absolutely right on that. And, write down why things went wrong. Oftentimes what we're finding out on Tuesday, Wednesday, Thursday live trade setup events is, a big mistake we continue to make. And when we say we, I mean me, is just entering too quickly, being too impatient, right? Being too impatient. Let the candles tell you where the support is. Let the candles tell you where the resistance is, and then implement a game plan. I think it's a better approach. Windsor, the answer to that question is yes. Kim, I'm going to have ask Isabella, my trusted sidekick, to cut and paste the link for the platform trading website into Zoom, Facebook, and YouTube. And that's the complete schedule of events. It does change every week, although the Tuesday, Thursday, Wednesday things are set in stone. And there's other events there as well, how-to events and things like that. Thank you, Isabella. When I said trusted sidekick, 20 years trusted sidekick. Thank you for all your help, Isabella. Scroll up here real fast. I think we got everything more or less. Give me a couple more seconds here to scroll all the way up. Okay, so Theo asked a great question. Also, when you watch the individual stock on the S&P index, for example, the biggest companies, no, not for the S&P. The S&P is too big. It's 500 large cap stocks, right? And they react to certain economic impulses and inputs and outputs in a certain way that's different than the NASDAQ. That's different than the Russell 2000. Remember, we're talking large cap, 500 large cap stocks, big established companies. The NASDAQ is only 100 non-financial stocks, and it's a market cap weighted index, the NASDAQ, right? So some of the bigger companies, Google, Apple, Tesla, I'm sorry, Google's got 2 actual listings on there. Tesla, they're bigger, so they have more weight. So when things happen, it's not going to be 100% correlated with the S&P, the Russell, or the Dow. And that just opens up the door for another comment, and that is, in these really liquid futures markets here, I'll just throw out the NASDAQ. I had gold up there. This you could trade, or as Dan Grams would say, express your opinion 23 hours a day, right? So there's only a 1 hour close period from 5 to 6 o'clock East Coast time. At 6 o'clock, then you can go ahead and get in there and again. So as an example, after hours earnings, you could participate. Don't have to have a pattern day trade account, 25,000 in an equity account. Number one. Number two, you get access to all the liquidity in the book that's global, worldwide, centralized. And number three, what happens when Elon Musk tweets something crazy, right? Which he's done. And I'm maybe not crazy, but uniquely, he states things uniquely on Twitter, and that could move the NASDAQ 100, right? So in that case, I do look, right? Not the S&P 500, but in the NASDAQ. Dow, same thing, but Dow's a little bit more, they're blue chip, big established companies. And then the last one, the Russell 2000, completely different, right? It's a small cap stock, right? If you take the Russell 3000, which is small cap, and then you take the smallest of those the 2000 smallest, that's the Russell 2000. And those might be more, a little bit less sensitive to international events, more sensitive to domestic events, more sensitive to supply chain issues because they're smaller and they don't have as much buying power as, say, Amazon does. So those are also not 100% correlated and require a certain level of a different kind of look and feel on your analysis. But again, there's so many of those. There's not one stock in the Russell 2000 that I would look at as a barometer. Anyway, sorry, a little bit off in right field there on that question, but I appreciate it for sure. Chris says, you made a 3-part trade in the early session. Why not wait to enter until the last entry point? Well, that's a good question. And as you recall, we were trading in the micro E-mini S&P, and we scaled into a position, right? So we scaled into a 3-unit or a 3-contract position over a period of time. And the reason I did it today that way was because we had extraordinary amount of volatility. I felt my bias was correct. And if I was going to do that same, maybe a 3-unit trade on a bigger contract, then I would be exposing myself to more risk than I wanted to handle, even though we were in a sim account. So that's kind of why we did it that way. There was no mystery to it. It was just the way it worked out from my point of view. William says, my stop moves to a 1-tick winner after I'm up 3 points. Any thoughts? That's what Griffin does. Kind of, although he's a little more sophisticated. He has a little more sophisticated stuff going on. But I don't know if there's anything wrong with that. It's just that's a technique that if it works for you, it works for you. I prefer a more patient approach. I prefer waiting, letting the natural volatility of the market occur. And it's really hard to do in some markets, like the NASDAQ. You got to give yourself a lot of breathing room. Otherwise, you're going to get stopped out artificially. Or if you're not using micros, take way too much heat. So that strategy, I don't know if I'm a fan of it, but if it's working for you, it's working for you. And I get it. But I don't know. I just don't know how. I've never tried that approach before, and I think it's kind of tough because, again, that natural volatility, you're gonna tend to probably get stopped out a lot on your 1-tick winner, and then if it's a loser from the get-go, you're going to be in trouble on the risk reward, overall risk reward relationship of that strategy. I don't know. That's what, just off the top of my head, what I'm thinking of. Windsor, what's the best times to trade, to day trade? Well, you want to trade markets that have volume. Let's take a look. Here's my quote board here. Let me just move this over in the center. You want to trade markets that have volume, right? So certainly the ES has almost 1 million today, a lot of volume. All the stock indices have pretty decent volume. And because what happens at night, and then maybe at lunch, volume loosens up a little bit, right? Lunch, I'm talking about New York lunch, 11:30 to 12:30. Volume gets lighter. At night, volume is a lot lighter on many of these markets, not all of them, but many of these markets. So you want to have a tight bid-ask spread as part of your approach, for sure. You want to make sure there's liquidity so you can get in and out where you want to go. And you want to pick a time frame that works for you. So Griffin says he's not sophisticated like that. So the best times for me, I really enjoy the 9 to 10 o'clock Central, 10 to 11 o'clock East Coast, half hour after the market opens up. Remember, when the equity market opens up, you have a whole slew of players that get involved. People who don't trade at night. You have institutions that are expressing opinions on the open. You have swing traders that are expressing opinions on the open. So the group of participants, I think, when the market opens up at 9:30 is unique. At 10 o'clock, half hour later, things tend to settle down and become more normal. You can see the volume profile distribution on your chart, and it could help you make better decisions. So I like that. Some folks like pre-market. They want to take advantage of that economic release that happens in the middle. I'm going to say pre-market could be 7 a.m. to the open in New York. And it's really up to you. I think in the middle of the day, some wacky things happen and I can't keep track of it in my head. That's just me. And then there's just some folks that just trade the close, right? They just specialize in the close. You can't trade 23 hours a day because you can't keep your eyes open. You can't keep your focus no matter how much saturated fat you're eating. So make sure you pick a time when you're alert, and you could do it every day. You could get that muscle memory, and you could learn the paradigm of the market that day. That's kind of my advice on that question, but that's a great question. Theo says trading at market open in the morning is a lot harder than at the end of the day. Market moves more easily. Okay, that's a good opinion, and I think it's valid. PM, yeah. If you look at the recording from this morning's event, I don't know if you're in the event this morning or not, but Pam is asking, do you adjust manually as you go? We do. Number one premise is come up with your strategy, put your trades in, and sit on your hands. And then after a certain amount of time has passed, if you need to make an adjustment, make an adjustment. That's my philosophy, my personal theory. This morning, what we did was, since we had a multi-target trade, once one of the units was successful, we started trailing the stop up for the remaining units. And so that was all manual, right? I like to do it manually, and I'm using, Fibonacci, I'm using the volume profile to kind of find areas to move to. And I'm also looking at the candles, the bottoms of the candles, the wicks of the candles. Are we making higher highs? Are we making lower lows? What's going on? All right. What time is it? Are we in trouble? Are we too late? We're 6 minutes late. No one's turned the lights off yet. I want to thank everybody for coming. Please visit this platform training page here if you want to see some more great stuff. Check out the NinjaTrader platform if you want to see what my opinion is. The platform is exceptional. Keep in mind, I've been doing this since the whip and buggy. And I've tried just about every platform as they evolve since we started. And I've ended up with what I think is the best one. So hopefully you'll have a great experience with it also. Thanks for coming. That thumbs up on the YouTube page. If you thought it merited a thumbs up, appreciate the thumbs up. Greatly appreciated. Hopefully we'll see you again. Yeah, we'll do Edna. We'll do strategies come Tuesday, Wednesday, and Thursday. That's all we do is strategies. Terrence, thank you. Happy Thanksgiving for everybody. Even if you're not in the US, happy Thanksgiving to you as well. Hopefully you can enjoy some time off with your family and friends. And I just want to leave you with this. Be safe out there. Take care of each other. Until next time. Bye-bye.